Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 18th of December. I'm Daniel Lam, your host for the podcast. Being a keen movie watcher, I love to spend this time of the year re-watching some old movies. Now, it is quite amazing how many of them are becoming reality, especially those related to AI and technology. Such is the dominance of the AI investment boom that it has become the biggest driver of US growth in 2025 and is likely to stay a key driver in 2026. Now, there are estimates that 2/3 of GDP growth in the first half of 2025 was due to the surge in tech-related investment, including spending on software, information processing equipment, research and development, data centers, and tech-related manufacturing facilities. A third of this tech investment growth came from the Magnificent Seven. They increased their CapEx spending by 40% in 2025 for a second consecutive year, and this CapEx spending is likely to be staying strong in 2026. Now, easing financial conditions, tax cuts, and the rising political stakes of the AI race creates a favorable backdrop for further expansion of AI investment, and of course, the strong AI adoption demand in other sectors. But 2026 is not going to be as one-sided, i.e. bullish on AI, as in previous years. Now, in the earlier podcast this month, we already talked about that there were weaknesses in the last few mega-cap company reports in the third quarter US earnings. We also spoke about the number one risk in 2026 being any sharp change in the bullish narrative on AI. A turn in this structural theme can put pressure on this late cycle equities rally at such expensive equities valuation. Now, there are concerns about the long-term sustainability of this kind of large-scale investments if demand for AI adoption is scaled back, or if indeed we see some technological breakthroughs that reduce the need for such investments. There are also questions on how megacaps are financing their capex investments, i.e., do they need to relever instead of using their self-generating free cash flow? Now, regarding the real economy, the AI boom may also lead to reduced demand for workers. While we expect AI adoption to eventually create job demand in other sectors, there is a risk that prolonged labor market weakness would eventually weigh upon tech investment and hindering prospects for high and sustainable long-term US GDP growth. Well, I do not believe we're going to see a scary scenario such as the Terminator. It will probably and hopefully be like Jarvis in the Avengers movies. What is for sure is that there is going to be plenty of investment opportunities ahead in the technology space in 2026. This is the penultimate Cut to the Chase podcast for 2025. There will be one final one this year on Monday, the 22nd of December. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.